shortly. It is recording. We'll give it about 1 more minute and we will start. Okay, let's go ahead and get started. Thank you everyone for joining us. I just want to let everybody know we are recording this, and then if you could just please keep yourself muted. And we're going to go around and have everybody introduce themselves. My name is Julie Baraychuk, and I'm with Sterling Insurance Group, and I'm the marketing manager. Quintin, could you introduce yourself?
Yeah, thanks, Julie. My name is Quintin. I work with Sterling Insurance Group. I work as part of their cannabis practice group. I've been in insurance for about 7 or so years. I've been helping cannabis businesses inside and out of Michigan for about the past 3. Definitely excited to be here and talk a little bit more about scaling your business effectively from an insurance and risk management perspective. So thanks, Julie.
Go ahead, Brad.
Good morning. I'm Brad Richards from Sterling as well. I specialize on the employee benefits side, been in the industry over 20 years now, and I've been practicing in the cannabis space for the last few years, and very excited with a lot of the opportunities that are out there. So glad to be with you today.
Thank you. Okay, Robin.
Hi, I'm Robin Schneider. I'm the Executive Director of the Michigan Cannabis Industry Association, and happy to be here this morning.
Thank you. And then Jason, could you introduce yourself?
Yeah, thank you. Good morning, everyone. My name is Jason Canvasser. I'm a partner with the law firm of Clark Hill, based in Detroit. I specialize in really all aspects of the cannabis industry, from licensing to regulatory compliance, municipality issues, supply chain contracts, and the like. We'll talk about a little bit of that today. So I look forward to having a fruitful discussion with everybody.
Thank you. And then last but not least, Anne-Marie.
Thank you. Hi, everyone. My name is Anne-Marie Welch. I also practice at Clark Hill, and I am a labor and employment attorney. So I work with human resources and other business partners to solve their people issues.
Perfect. Thank you. So I'm going to go ahead and get started. We do have a couple questions we're going to answer on this webinar. And then I just wanted to let everybody know, again, if you could keep yourself muted throughout the whole thing, you can unmute yourself towards the end when you can ask questions. And then also, if you did have any questions during the webinar, you can feel free to enter them in the chat box. So Robin, my first question is for you. If you could please speak on the state of cannabis in Michigan.
Sure, absolutely. Well, I just want to start with thanking Sterling Insurance and Clark Hill. You both have been wonderful support to the association and our members. And, very excited to participate in this today. We appreciate all of you. We appreciate you participating in our golf tournament and, all of our events. And as many know, Clark Hill, Michael Patwell at Clark Hill is the association's corporate legal counsel. And one of the things I will say that, when you have an association as big as ours with as many entities and PACs and, operating on the up and up, like the trust that you have as an association with your attorney is so important. And so, I would say how grateful we are for that relationship there, because I can always, count on our legal counsel to steer us in the right direction and make sure that we're doing everything on the up and up, which is so important in the cannabis industry. And so, the Michigan Cannabis Industry Association, our membership continued to grow this year. We're quickly approaching 300 members, and we're very excited about that and excited to see what 2021 will bring. Highlights for this year, we were declared essential, in the middle of a worldwide pandemic. And, the State Department, the Marijuana Regulatory Agency, did an incredible job of giving us all the tools and resources like curbside and drive-through and expediting those delivery applications to make sure that our members were able to pivot very quickly and continue their operations. And so they really did our industry well this year. Aside from that, we adopted a new set of rules, and in that new set of rules, there were a number of, technical obstacles that we were originally dealing with, everything from, testing to mixing batches. So we got a lot of new conveniences included in that rule set, and we're able to clean up a lot of things that were hindering industry growth and development. And so that was a big win for us when the rules were adopted. And again, the regulatory agency was wonderful to work with through that process. Obviously, we don't always agree on everything, but they did really well. We passed the clean slate legislation, and that was very important to our members. We were strong supporters of that in the lobby effort. And, we were, very happy when we did the ballot initiative originally. We weren't able to include expungement, which was a disappointment, but it was a violation of the single subject rule. And so we vowed to come back and do everything we could to include marijuana expungements. And we were able to actually get automatic marijuana expungements included in that package. And so we really felt good that we were able to help participate in that effort, to fund a lobby effort behind it, because it is something that we promised we would come back and do when we did the ballot initiative. And so even though it wasn't the same organization that ran the ballot initiative, I feel like we as an association did our part in stepping that up, and that's so important. The industry reached $440 million in adult use sales this year. That's very impressive. Detroit opted in. So we're very excited to see growth in that region of the area. And, we're working very closely with the city to make sure they have all the tools and resources they need moving forward. And I'm very happy to be a resource, for local municipalities. We don't endorse local ordinances. We don't get involved in the zoning or numbers debates, but we are a resource to make sure that the cities have all of the information that they need and the resources they need as they're moving forward. So we're happy to be a resource in that process. We celebrated 1 year this week of adult use sales. When we launched adult use sales, we started out with kind of a rocky start. The state didn't give us much notice. It was kind of a surprise launch. Our members were not happy about not getting notice. But I would say that it certainly lit a fire under our members to go and increase their, expand their operations, improve their grows, expand their processors as quickly as possible. So we are working to get that supply up so that we can hopefully soon meet consumer demand. And win those consumers over and get them into the regulated market by providing reasonably priced products that are innovative and attractive. This year really highlighted the need for HR resources in our industry, between dealing with the virus and unemployment issues, worker issues. It became very political issues as well, social justice issues within the workplace. It really evident that our industry just really needed more education and help in the human resources area. Everything from how to, document employee issues, keep a paper trail, what to do, when you're having a problem with an employee. And so I'm grateful you guys are here to give some additional insight into that, because we certainly need it this year. Our members made huge contributions to their communities, everything from PPE to food drives, can drives, coat drives. Our members' contributions to local charities, feeding families that are struggling with poverty. I would say our industry really stepped up and gave back this year. And that was something that was wonderful to see. We created jobs at a time when, jobs are really needed. We do have members that are still seeking investments as we're going into 2021. Anyone out there that wants to invest, our members are looking to, obtain investments, partnerships, expansions. So anybody that wants to invest or looking for more opportunity, please get a hold of me and let me know, and I'll connect you with members that have reached out that are looking for that. We're looking forward to social consumption lounges next year. And, working on a few insurance issues, to accommodate that. But, we're hopeful to, see our members bring that to fruition, as well as events. And so those things have been hindered because of COVID, but, we can still plan for the future. Other than that, we've had a lot of amazing partnerships and collaborations, just like today with Sterling and Clark Hill. We love to see our members get together, work together, refer clients to each other. And so I really appreciate this is a good example. We've also had growers and processors partnering with brands and, social equity applicants and all of that. And so it's really amazing to see how the association kind of becomes a community and a platform for business development and partnership. So with that, I will pass, and thank you again so much.
Thank you, Robin. We truly appreciate the association and everything that you guys do.
Thank you.
So my next question is for Jason. We have been receiving a lot of questions in regards to brands, recipes, and supply agreements. Could you touch a little bit more about that?
Sure, and that's really integral as businesses grow and expand their footprint. I want to kind of back into that a little bit, because when we're talking about growing and scaling your business, there's so many things involved, especially from a regulatory and legal perspective. I mean, having a good team of attorneys, accountants, insurance professionals is of the utmost importance as you get into this regulated industry and as you grow through the industry, both as in terms of your location and your brands and everything else that comes along with it. So, I think there's a few things you got to keep in mind. First is, obviously, this is a very highly regulated industry. So knowing the applicable regulations, whether they're local or state, or we talk about medicinal use, or we talk about adult use, because as your company grows, you're going to want to make sure you are really fitting your goals and your visions in those regulated boxes, so to speak. And as part of that, you want to talk about your assets and how do you protect your assets. So having a proper corporate structure, whether it's a single LLC or a corporation, or if you have multiple locations vertically integrated, separating those legal entities in an appropriate manner. And that leads to your question, Julie, because when you're scaling your business, there's a lot of things that are unique, and you got to find ways to differentiate yourself. That may be unique products, that may be some kind of organic certifications, packaging, your pricing, how you provide quality to your customers, and brands, recipes are really at the foremost of how do you differentiate yourself from everybody else. And we have gotten a ton of questions in that regard. And we got to decide if we're in the medical space or the adult use space, or we're doing both. So whether you're a grower or a processor or a retailer, having a package of documents at the ready is really important. And there's things to think about depending on which licensee you fall within. For example, growers. One of the questions I get a lot is about strains. So who is developing your strains? Who owns those strains, and how do you protect those strains? So if you're a grower and you got a lead grower who is the one who's coming up with all of your strains, you want to make sure you have a document in place that protects it and make sure that is your property, so that if you and your grower split at some point, that grower isn't taking all your confidential strains and taking them to maybe your lead competitor. So you may need an employment contract, you may need some kind of confidentiality agreement or something like that. And processors have their own real set of issues as well. And, the methods of processing the raw flower into maybe a vape cartridge or an edible, who's developing that, who owns that process, recipes, flavors, especially when you're talking about vape cartridges or gummies or, a handful of other things. who's coming up with those recipes and who owns those. So again, it's a little bit different if you're in the medical space versus the adult use space, which I'll touch on in a second. But having those agreements in place early on is important to set expectations as to who's developing these recipes and who owns those at the end of the day. Retailer.
Can I interrupt you real quick on that?
Yeah,
point?
Of course.
Okay, so one of the things that Jason's talking about there is a non-compete, non-solicitation, work product confidentiality agreement, right? And if you have that set up and available for an applicant to sign once you give them an offer, they're more likely to sign it as opposed to after they've been working for you for 6 months and they think, and you're introducing them to this document and they think all of a sudden that they have leverage and are extremely valuable to you and they don't want to sign it. So it's a lot easier to get people to sign documents at the beginning of employment as opposed to 6 months down the road when you realize that you've got someone with something of value that could hurt you. And if they don't sign it, you're going to be in trouble. So having that set up from the get-go is super critical. So I just wanted to touch on that while you were talking about it.
No, I appreciate it. And that's a great point. I mean, think about, for those in the retail space, your managers, the people who are running your shop or shops. You know, if they went to your competitor and they know your pricing and your margins and everything like that, and they were able to be able to share that, I would assume be pretty detrimental to a lot of businesses. So putting in those kind of non-compete agreements early on and making sure that your stuff is kept with you and outlining the recourse of what happens if that information is shared. Like Anne-Marie said, if you don't put that early on, it's a whole lot more difficult to put it on at a later point of time. So yeah, that's a great point. I think the other thing that it's important to touch upon is supply chains. There is, you know, if you're in the adult use side, you can move your product between the processor and the grower. You can move it to the retail space. Whereas if you're talking about medicinal products, you may move it from a grower to processor, but not necessarily the other way. Excuse me. So depending on where you are in this chain depends on what information, what you're giving to that next tier in the license process. So, for example, in the adult use space, if you're going to be if you're self-distributing, you may not necessarily need to give somebody the right to use your packaging. But if you're not able to self-distribute, before somebody else starts using your packaging and your brand labels, you're going to have to give them a process where they can actually use that appropriately. So those are all very important considerations, things that I think are coming more and more to the forefront and something that should be addressed, again, early on, before you've been doing business with somebody for 6 months and then an issue comes up as to whose package it is it being applied properly, and is it accurately conveying your brand that you want to convey to the public?
Right. Okay, so my next question is for Anne-Marie. When businesses start off, many of them are focused on a profit rather than tidying up personal issues. Are there any documents you think are critical to the hiring process, and why?
Absolutely. Thanks for the question. So, you know, one of them we already talked about, right? The non-compete type of agreement, but a lot of things that employers overlook, one of the things is an application. Okay. And I don't want you to go out on the internet and just print an application because Michigan has laws about what you can ask and what you can't ask. And it's really important that you have an application that asks the proper questions. And there are a couple things that I want to make sure that you're asking. And one of which is when you're asking about somebody's employment history, you don't want to ask them the reason for leaving. Okay. What are they going to write down? For a better opportunity. Every single plaintiff that has sued an employer, I have caught them lying on every single application that I've read. You want to ask them specifically, have you ever been terminated, suspended, asked to resign? And that's a lot harder question for them to answer if they've been fired, right? And you want to get that information. You want to ask for references, and you want to actually call the former employers and call the references and follow up on it, because, you know, hiring is expensive. Training employees is expensive, and firing can be expensive too. You don't want to waste your time on a bad employee or a bad applicant. So make sure that you're hiring right. Okay, make sure you're asking about non-competes right on the job application, and make sure that, because if you find out that they have a non-compete, you may not be able to hire them. And if you ask the question and they don't tell you about the non-compete, you can't be sued for tortiously interfering with somebody else's contract later on down the line because you asked them about it and they said no. If you don't know about it, you know, you really can't get in that much trouble for it, right? You also want to have on your job application what's called an abbreviated statute of limitations. So the statute of limitations is how long somebody has to sue you, okay? And in Michigan, most employment statutes are about 3 years. They have 3 years, and then breach of contract is 6 years, okay? But you can shorten that statute of limitations to 6 months and 300 days for some things, but mainly 6 months for almost everything, okay? And, you know, it's bad business for Jason and me because, you know, we make money off of defending cases. But if we can go to the court and say, hey, look, you know, they promised not to sue us after 6 months, it's good for you guys, right? Because we can get the case dismissed right away, or oftentimes the plaintiff attorneys won't even take the cases. Okay, so it's something really important that you want to make sure that you have in your job application. Okay, so just make sure that you have a good one, that you haven't gotten it off the internet. You want to have an offer letter that sets out that employment is at will. What does at will mean? That that they can resign or you can fire them at any time for any reason or no reason at all. Otherwise, employment could possibly be for cause, meaning you can only fire them with a really good reason, or you may have to give them notice or something like that. You want to set from the get-go that employment is at will. Okay, and it's really important that you have a handbook. There are certain policies that by law you have to have, and there are certain policies that you should have as a best practice. So it's important that you start the employment relationship right by having an offer letter, a non-compete if it's appropriate for employees, definitely a confidentiality agreement. Make sure they're filling out the application. Make sure they're filling out the application before you give them an offer, okay? Because there are things in the application that are contract-like. For example, the abbreviated statute of limitations. And if you've already promised to hire them, then there's no what's called consideration in the law for the contract. You want to make sure that you're doing things in the right process. Okay, and then you want to make sure as well, so we talked about the application, the offer letter, policies, okay, and then lastly, I want to talk about a corrective action form, and that's something that Robin mentioned, okay, and you want to have a form that you can use to discipline employees with. If you're giving them a written reprimand, or you're suspending them, or you're even terminating them, you want to have a process in place to ask all the right questions to properly document the discipline, the who, what, when, where, and why, and what policy that they violated. And if you have that in place, and HR checks it before it gets issued to the employees, you can make sure that you properly document any misconduct issues. Okay, and lastly, you want to make sure that you have a performance review, so you can document your employees' performance and it reminds you to do it. And those things are really critical to making sure that you start the employment relationship right and that you properly document it when you need to end it.
Thank you, Anne-Marie. My next question is for Brad. What are some factors to consider when initially starting your employee benefits package and as you continue to grow?
Thanks, Julie. Yeah, when you're just starting, it's easily one of the hardest steps because we have nothing in place right now. So thinking about budgets, thinking about who's going to participate, there's so many what ifs. So it's critical to partner with a good consultant to help you through that process. And as you start off, you'll see that you're going to excel very quickly. And what I mean by that is the decisions that you make in the first year, you're going to make leaps and bounds into the second, third, fourth, and continuing to tweak your plan as it makes sense for your business, for your specific industry, the space that you're in, and the demographic that you're at, the geographic location. So, based on the all of those different factors, it can be a moving target. So it's critical in just starting something. Well, number one, why do we even do something with benefits? Well, most employers want to provide something, but to Jason and Anne-Marie's point, it's about keeping those costs down. It takes so much to hire people, to attract people, that by providing as much as you can to be as competitive as possible with your employees, it can help you with attraction and retention. So it's really understanding what are these big number one priorities of getting in place. And as you're starting out, obviously the biggest thing is health insurance. And that's something that obviously is the cornerstone, but then it's filling in the gaps. And as we have seen this industry change and blossom, we have come across so many carriers, so many insurance carriers that still do not practice in this space. And so when we're starting a new relationship in the cannabis space with a new employer, a lot of times we'll hear, we want this, but we can't find it. We have really combed the market. It is changing every single day. And it's very invigorating for us to be able to find solutions for these employers that have been wanting to find something: life insurance, disability, voluntary options that the employees can pick and choose from. That the most common answer that we hear in this space a lot of times is no. So it's really finding and partnering and getting somebody to investigate all of these options, that there are things out there. So in terms of the basic framework, it's the medical, the dental, disability, life insurance, vision, et cetera, employee assistance programs. It's all of these things to try to frame around. There's so much as you are starting off, and as you continue to grow, we see rapid expansion, that having a partnership, to Jason's point, is critical because we have seen these spurts. We can help guide you through these processes and help coach you into these different spots that you might not even think about until it's too late. One of the most interesting things that we've seen in a lot of employers, not in just this space, but in many recently, is getting more creative. What I mean by that, we had a call just a little bit ago that a large employer is looking to actually offer benefits to a part-time staff. Do you have to do this per ACA code? No. But this employer is saying, I want to attract and retain. I have a large segment of part-timers that are in place. And what better way to differentiate yourself than to make yourself shine differently? So by offering part-time, even if they waive, there's something psychologically that happens, that the part-timer is now not considering just the hourly wage that they receive, but all of these additional benefits that they have the ability to participate in. Whether they participate or not, it means something. And so there's a lot of different things that happen in that regard that we can help coach through. So as you go from implementation to going into your second and third year, there's a lot of things that we will help track in terms of, I loosely call it the wish list. What do we want right now? What makes sense to put in place today? And let's earmark some of these other items that we can't do everything all at once. We've got to see what makes sense for the business, right? So we then track here second year goal, third year goal, fourth year goal, and we keep revisiting these and continue to amend it as it makes sense for the business. And as you grow, there's so many things that come into play. Are we going outside of our domiciled state? Are we going into areas because we've got an HMO that it's now going to be a factor? are we becoming large enough that instead of fully insured, should we actually consider self-funding? So all of these different factors continue to move and flow. And it's something to definitely keep a handle on. But it is a very exciting time. There are tremendous opportunities that are out there. And yeah, that's my long answer.
Thank you, Brad. And then my next question is for you, Quintin. What are some insurance policy pitfalls?
Yeah, thanks, Julie. There's a number of things to look at from an insurance perspective, especially here in Michigan's cannabis industry. As businesses start to scale, I think that it requires a shift in focus in the insurance strategy in general for these businesses. So I wouldn't even necessarily look at all of these points here that I'll mention as pitfalls directly related to an insurance policy, but more so oversight and understanding of your risk management strategy as a business in the cannabis space here in Michigan. And so what I'm talking about kind of as an overarching theme to a few of the things I'll mention here is, understanding as you scale as a business, understanding your insurance spend and how that plays into an overall risk management strategy. We talk a lot about risk management theory. Insurance is really only one component of that, and it's essentially a risk transfer, a risk financing vehicle. And I think it rings especially true here in the cannabis industry because as you scale, as you move beyond just simply satisfying requirements from a statutory perspective, you'll see that the spend can grow considerably. And I think that that's a good thing. I think that you should see your insurance spend run pretty consistent with revenue increase and an increase in vertically integrated operations. But I think it starts to make sense too to understand how you're transferring risk through insurance, and inevitably there will be some uninsured exposures, how you're protecting those uninsured exposures. And so that's kind of a long-winded blanket intro into a few of these things I'll talk about. One of them that we're seeing a lot, and again, this isn't even directly related to this being a pitfall of insurance policy coverage, but one thing we're seeing a lot of is as you scale your cannabis business, and Jason touched on this too, you create a number of different entities. You typically have a pretty complex organizational structure. It's certainly necessary, but there are some downstream impacts from an insurance and a risk management perspective that I think as your business grows, it makes sense to start paying attention to, because it can have impacts from potentially lack of coverage, muddied claim processes, and it can really start to increase insurance spend depending on how it's done. And so some things to look out for. If you're a vertically integrated operation, you clearly are going to have a number of entities. You're probably going to structure it in a couple of different ways. We see provisioning centers or the management of provisioning centers in one entity, cultivation, processing in another. Sometimes we see various entities created simply kind of in conjunction with a cap table as new investors come on board. The one thing that I would say with this is if your entity structure starts to erode from shared ownership or common majority ownership, that's where you'll start to see some significant impact from an insurance and risk management perspective. Policy coverage types like directors and officers coverage, workers' compensation coverage, depending on how you align your entities, those could be deeply impacted, and you might ultimately be looking at procuring separate coverages in those areas for the various entities, again, depending on how it's structured. Beyond that, if you're not sharing common interest or common majority interest among all of your entities, oftentimes you're going to probably start looking for different coverage altogether on these separate entities. We find it much more efficient if you can keep a common majority interest across all of your entities, whether it's through a holding group or whichever way is most efficient, common majority ownership group. What we find is you can share limits among all of your insurance coverages. You can still fulfill statutory requirements, and you can find excess capacity in the market to cover this entity, but you're spreading the risk out and you're spreading the insurance spend out among all of your entities. And so there's a lot there to uncover that we could talk about for quite a while, but the long story short there is as you've grown over the last year and a half, 2 years, as we've seen this industry expand considerably, consider how your entity structure has shifted and changed, and do kind of a circle back on how your insurance may or may not be covering some of those entities in that structure altogether. Moving away from that, insurance policies specifically, I think the number one thing to keep in mind is what coverages maybe were not put into place when you started out as an operation, or when you opened that first facility or provisioning center, that probably make a lot more sense now. We're getting to the point now where businesses are expanding to the point that a complex insurance program really starts to make more sense. We're talking going beyond general liability and property. One of these that really sticks out, especially due to obviously the COVID pandemic crisis, is management liability. So that's broken out into a couple of different things that many of you have probably heard of: directors and officers coverage, employment practices liability coverage, as well as a kind of a lesser looked at fiduciary liability coverage as well. These coverages, completely frank with you, are not cheap. I'm sure everybody has a different threshold of what affordability looks like, but all in all, these are relatively expensive coverages. And I wouldn't even go as far to say that they're, extremely broad-based coverages either. There's pretty limited options out there right now. Even if you're outside of the cannabis industry as a business, the options are limited and expensive because of all of the fallout from COVID. But these policies make a lot of sense if you're the partners or the directors of an organization. If you think about all of the investment in the employee practices that are kind of at your leadership disposal, you have an enormous exposure from a liability perspective, and directors and officers coverage can help address some of that. Another thing about directors and officers coverage we're seeing a lot in the market, Robin mentioned this, I think Jason touched on it a little bit too. All members of MICIA and across the cannabis industry in general are looking for additional investment opportunities. Oftentimes, D&O coverage is going to be a checkbox as new investors enter this space. And so if for nothing else, this coverage might emerge, at least initially, as a means to check a box as you seek additional investment support. A couple of things to keep in mind there. And then Jason, Brad, and Anne-Marie all touched on various elements of the hiring process and employee wellness, employee assistance programs, non-competes. That's a big one here in the industry right now. All of these issues circle back to some type of exposure and transitional liability to employment practices liability. And it really makes a lot of sense to get some coverage in place to help kind of support transition of risk in this area, in this exposure.
Hey, Quintin, what do you think the average price of defense of a single plaintiff employment discrimination lawsuit is? Win, lose, or draw, just the cost of defending yourself in court to trial.
Oh, you put me on the spot. I don't even have the slightest idea, but my guess is $1.5 million.
Oh, well, I'd have a fancier car, I think, if it was that. But it's $175,000 right now. But, I just did one against the EEOC, and we're asking for fees in excess of $650,000. So it's incredibly high as compared to the cost of EPLI insurance.
Yeah, and Anne-Marie, we see this in the legal world all the time. People don't want to spend the money. They've spent a lot of money getting their entities up and running. They spent a lot of money in licensing fees. They've gone through the process. They're exhausted, and they just want to get their businesses running. And so they a lot of times say, you know what, I'll just do this myself, or I'll do a Google, or I'll find something online, and I'll make it work. And it's oftentimes those contracts or those decisions not to do something at what seems at that point in time to be a big cost, and oftentimes it may be, but that those costs just add up exponentially, like you said later on. It's those contracts that don't have clear terms, or maybe that the fact that there is no contracts, where people end up spending, easy $100,000 plus litigating issues that may have been able to be addressed through an insurance policy, or maybe spending a few $1,000s on the drafting of some appropriate contracts.
Mm-hmm. Absolutely.
Well, I think both of those comments support this idea too of what does that kind of broader risk management strategy look like. And I say that because the insurance coverage isn't cheap either. And Jason, to your point, insurance coverage may be running $30,000 to $40,000 annually for something like employment practices liability, paired with a couple $1,000s additionally to maybe, draft up a few of these employment forms appropriately. That is probably the ultimate solution. I think these things have to be grouped together to be effective, at least at this point in the industry. I mean, it kind of goes that way for any industry, but in the cannabis industry specifically, I think it's this twofold approach where your insurance spend is one piece of it, but then your spend on additional risk management efforts, employment or otherwise, are going to make a difference in the long run and probably really drive the mitigation of the risk altogether. So very good points. A couple other things I'll mention briefly. Crime insurance, cyber liability insurance. These are two high ticket items that I think can get overlooked as you move very quickly to scale. Crime insurance is something that, I think misconceptionally can be deemed as covered under some property coverage forms. Typically not the case. There's probably a sublimit to it. It might cover a little bit of your inventory, your cannabis inventory specifically, but largely a standalone crime policy is probably the way to go here. It's a cost benefit analysis. You probably have, we know businesses here in Michigan have fantastic facilities and safeguards in place. So trying to figure out how much risk you need to transfer and what you're comfortable with transferring will play into a crime policy. And then cyber liability I make mention of because this is kind of a big item across any industry, but in cannabis, consider how your business has probably changed since COVID. I hate to have to keep bringing it up, but COVID has certainly impacted businesses. And one of the ways that has affected the cannabis industry, especially on the retail side, is consider the interaction you're now having with your end customer. From a kind of more of a cyber perspective. You're exchanging a lot of data, and then that data is being transmitted throughout your organization straight to the state. You've probably increased, 5-10 times what your employee size was a year and a half ago. You have a lot more employee data. There's a number of things that I think make sense to consider with your exposure there. And if there's an area of coverage that I think is emerging pretty well for the cannabis industry, I do think that it's cyber liability. There's not a lot of options, but the options that exist not only provide a really kind of comprehensive set of coverages, they again provide some risk management service support by providing some third-party assistance from, a cyber risk management portal, training, things like that. So you're getting some bang for the spend there that I think is really worth looking into. So there's a number of other things we could talk about here. Limitations, exclusions on policies. I could probably make everyone fall asleep. So I'll back away from that for now. But all in all, I think just circle back on what your insurance spend looks like, see how it's increased over time, and then start pairing that into a broader risk financing strategy with looking at what you're doing from a risk management perspective to try to mitigate some of those exposures altogether. So thanks, Julie.
Yeah, thank you. I have one more question. I know we're all tired of hearing about COVID, but I just wanted to ask it. So if we can spend just 5 minutes on it, everybody can put an input. And it's just, if you guys could shed some light on COVID and what should employers be making sure that they are doing. Anybody want to start?
I'm happy to start. Number one thing, you need to make sure that you have a COVID preparedness plan. If you don't have it, get one. We're happy to help you draft it. It needs to have certain elements as required by MIOSHA's epidemic orders and the NDHHS. Okay, not only do you need to have a plan, you also have to train your employees on what the plan is. And I can tell you that my OSHA has been coming around. Okay, about 1 in 5 of my employers have gotten visits from OSHA's asking them if they've got a plan, and wanting to see the plan, and making sure that they're following the procedures. Why is this so critically important? Because the legislature passed a law that says that if you follow that MIOSHA's orders and MDHHS's orders and any laws that are put into place with respect to COVID, then you have immunity from lawsuits. Okay, and so we want to make sure that you guys are protected. You know, we may have disagreements over what these laws should be, but if you follow them, then you will have protection from liability under the certain statutes that have been passed. So that's my 2 cents on those things. Make sure that you're following the law, so you can get protection, that you have a plan, and that you're enforcing it, and that you're training your employees and managers on enforcing it as well, and what your plan is.
Yeah, I think that's a great point, Anne-Marie. I think, you know, if you pay any attention to the news, you see the restaurant industry is at the top of it right now in terms of COVID compliance and following the pandemic orders. You know, I think the cannabis industry has done a really, really good job in compliance in the way they've handled the different orders. But there's enforcement action taken across the board right now. So being compliant, regardless of how you personally view those orders, is certainly important. And as always, if you have questions about how do these COVID orders impact you, how do they impact your business, what can you do, what can't you do, reach out to your team and ask those questions early on. It's always an evolving situation. Those pandemic orders change on sometimes a daily basis, especially early on. But understanding what you should and shouldn't be doing is really important.
I'll just weigh in briefly and say that, you know, that was the first thing as an association, you know, we're an employer as well. So we did the COVID preparedness plan before we even allowed any staff back into the building, made sure everyone had a copy, made sure everyone signed it, put it in every single office and every bill, you know, went through it. I mean, I agree. It's really important because if you know, somebody comes in and the staff says, we don't know what you're talking about, that's a red flag. So you want to make sure that even your staff knows what the plan is. So.
Robin, you said something that triggered a thought in my head, and that is, if you have less than 500 employees, in addition to having a plan, you also have to make sure that you're that you hang FFCRA, the Families First Coronavirus Relief Act poster up in your office. If you're, you know, have employees there, or if your employees are working from home, make sure it's available via a website, or you've emailed it out so that way they know they have access to it. You may not, unfortunately, get the 1-for-1 tax credit, but you do have to make sure that you let your employees know about it.
Yeah, no, I'll just chime in too real quick, Julie, with to echo some thoughts from both Jason and Anne-Marie and Robin on this. You know, there's going to be continued downstream impacts from an insurance side, and we're already seeing it. I think the cannabis businesses in the state do a great job of taking care of their employees. They always have. I think it's an industry that people want to come and work in for that reason. Just keep in mind, if you do get cited, right, that's going to have downstream impacts on insurance applications at some point in time. You answer a lot of questions on an insurance app, whether you know it or not sometimes, that state you haven't had situations like citations. And if you do, you'll be explaining that. And I think we're going to see it constrict coverage. So it's just kind of one more reason to support the need to just follow these regulations, regardless of, you know, any kind of political piece to it. But just, you know, we'll all get through this, and I think we'll come out on the other end better. But it will have some downstream impacts in insurance as well.
Thank you, Quintin. So Anne-Marie actually put the FFCRA notice in the chat. So if you guys need that, it is there. We can also send it out to you as well. And I had somebody chime in, Edith, she wanted to also mention that the cyber insurance mentioned is important. Also, IT training with staff is crucial. So they are not clicking on links that will enable cybercrime, because she said on the banking side, we have had a cannabis customers targeted in cybercrime. Their PCs and Office 365 had compromises, which resulted in fraudulent wires and ACH sent to the bank. Fortunately, we were able to stop it, and without a loss to the customer or the bank. But obviously, it is out there, and as she mentioned, it is important.
And Edith, thanks for mentioning that, because one other thing, we didn't get to this, but I think Jason touched on it a little bit. I mean, your contractual risk transfer, so the contracts that you have between yourself and various vendors and within the supply chain in this industry, you probably look at, certificates of insurance for liability, product liability, things of that nature. Outside of the cannabis industry, we see a lot of requirements contractually for cyber liability insurance for situations just like this, as money starts moving around and getting transferred, albeit it's a bit more difficult in this industry due to regulation. But I think as we continue to see that change a little bit, especially with regional banks, these types of these types of contractual risk transfer agreements that require cyber liability insurance might definitely increase, and it might be worthwhile for your business to consider.
So does anybody have any other questions they would like to unmute themselves to ask or chime in the chat box? Give everybody a couple seconds to think. Does anybody else that are speakers, do you guys want to mention anything else?
I guess I'll go first. I think, look, this is still an emerging industry. I know we've been at it for a couple of years now, but this is still an emerging industry. So there is going to be ups and downs and different curveballs thrown our way as the industry expands, as businesses expand and they try to scale. So it may sound like we're beating a dead horse here, but having a good team in place and being able to rely on that team, I just can't stress how important that is in order to really allow you to scale properly and manage your risks. Because if you scale too fast, or you scale improperly and you expose yourself to risks, then it's really all for naught at the end of the day.
I didn't get anything in the chat box, and it doesn't look like anybody unmuted themselves. But I did want to say that if anybody did have any questions, feel free to reach out to any of us. We will send out this recording, and I'll have everybody's contact information. So if you wanted to reach out to anyone in particular, you can do that if you don't feel comfortable reaching out to me. So thank you so much for everybody joining us. Oh, yes.
Yeah, Julie, I'll mention, Robin mentioned it a little bit. The MICIA is a great resource out there in this industry. I'm sure many of you on the call are part of it or have leveraged it in the past, but if you haven't, it's a fantastic industry practice group, and their efforts both just with businesses and at the state level, I think have been tremendous. And so, don't hesitate to connect with that team and Robin, and, leverage that as your business grows, because I think it's critical that, you become a part of an organization like that. I think it helps the effective growth of the industry overall. So if you have questions, that is a great place to start and direct them.
Thank you, Quintin. I know you probably just want to know when the next golf tournament is, right? Yep.
That's it's going to become my MO. I think we're in the MICIA magazine, and I don't have a professional picture. I have a picture of myself on the golf course. So very, very appreciative. Where everybody knows now, I love golf. So can't wait.
I'm glad everybody loved the magazine edition that came out. I'm getting a lot of good feedback, and I saw Edith is on here and she contributed, and just appreciate everybody's collaboration on that. Like I said, we didn't plan on going in the magazine business, and I wasn't planning on being an editor of a magazine either, but I know our members love it. So, glad you guys gave me the feedback. Thanks.
Keep up the good work.
Thank you. Nice to see you, Jason.
Likewise. Good to see everybody here.
So with that, I will just say thank you again for everybody, and I'll send out the recording with all of everybody's contact information. So feel free to reach out to any of us with your questions, and we hope you have a lovely day.
Thanks.
Thanks, everyone.
Thank you.